Welcome everyone to Vested Interest. This is Shane back for another stock pick of the day video. It is May 22nd. Today we're going to take a look at one out of the consumer staple sector. This was recommended by Tanya Myers. This was on a recommendation on our Krispy Kreme video we did about 7 days ago. DNUT is the DNUNT is the ticker on that one. If you want to know more about it, go ahead and check out that video. I'll try to link it in the comment section down below, pinned comment down below. Again, consumer staple sector, Dole. Let's jump in. And if you would like to help me out, clicking that thumbs up button if you find value in the content down below, hit that subscribe button, make sure you're subscribed to the channel, join us on this journey to financial freedom, join the Vested Interest community, hit the notification bell so you're notified whenever we put out any new content. That's one of the most important, making sure you click that notification bell so anytime we put out any new content, you see it, and drop a comment down below, share with anyone you think that might find value. Doing all that does really help out a small YouTube channel like mine grow. It helps to spread the videos. It helps with the YouTube algorithm. The more you do that, the more you comment, the more you share, the more you subscribe, the more you click the notification bell and the thumbs up, the more they share the videos with other people. And that is my goal here, to share these videos. The path to financial freedom, in my opinion, is through buying stocks, buying assets, stocks in this case, in growing companies that pay dividends and eventually to live off those dividends. That's my opinion, and that's why I want to spread the message. So help me do that and do all those things. Really do appreciate everyone out there who has taken the time to do that. Now, this is the Vested Interest Stock Screener. This is not only how I set up these videos. We're going to run through this screener and look and see if it meets 5 of 8. If this was a bank, we'd look at price to book and look at 6 of 9. And just because it might meet those criteria at the end of the video does not necessarily mean that I'm investing in a company, right? But we're going to use this screener as the way we set up the videos. It's also how I look at a company on a high level to see if I'm interested. If it is a company already in my portfolio, it is a back check to make sure the company still meets the initial screener that I've set up. And again, just because it meets 5 of 8 or 6 of 9 does not necessarily mean I'm investing. It means it goes on my watch list if it does, and then I do more of a deep dive into the financials, do a discounted cash flow analysis so I can see what I'm willing to pay for the company and then wait for the stock price to align with that forecasted price through the discounted cash flow analysis. Now let's continue on back to Dole. Check them out at www.doleplc.com. That's www.doleplc.com. That is their homepage where I pulled this information from. Dole PLC is the global leader in fresh produce and category leader in a number of mainstream categories in key markets. We are the #1 leader for bananas in North America and hold the #2 position for bananas in Europe. We also hold the #2 position for pineapples in North America and Europe, the #2 position for value-added salads in the United States, and are the #1 global exporter of grapes. We are prominent global players in attractive growth categories such as organic produce, avocados, and berries. While we are the market leader in fresh produce provisions, a number of European markets supply a wide portfolio of products and categories ranging from the more familiar to the truly exotic. And you're probably very familiar with the Dole name, but they started out way back in the 1850s here with Total Produce and Dole here on the right, and then at some point they combined these two companies under the Dole umbrella. You can see here #1 for bananas in North America, #2 for Europe, #2 for pineapples in North America, #3 in Europe, and global exporter of grapes. And that's what they do, right? They supply, they not only supply, they grow and supply a lot of the produce that might be in your farmer's market, your local market, your grocery stores, that sort of thing. Again, www.doleplc.com. That's their homepage. Check them out if you want to know more about them. This actually right here, their history was actually pretty interesting, and it goes, from the 1850s all the way to present. So really check that out. That was pretty neat. I did not know they started overseas, right? East, North, and Northern Ireland here. Importers from Ireland. There's several other countries that they have their arm in, or they started out of, right? So that was pretty interesting, I thought. So go ahead and check it out. Now we are talking about Dole PLC, ticker DOLE, out of the consumer staple sector. The reason we are taking a look at them, down 1.97% on the day, closed out the day at $12.69. 52-week range, as low as $10.55, as high as $14.01. It's not quite at its 15% of its 52-week low yet. It would need to drop to $12.13 or lower to be within 15% of its 52-week low. So for me, this one would need to drop a little bit lower for me to be interested. Market cap of 1.2 billion, so a small cap company here. Beta of 0.86, not quite as volatile as the overall market, a little less volatile, even though there was a bit of volatility today. PE ratio, $6.27 per share. Low PE on this one. Earnings per share, EPS sitting at $2.03. Earnings date, August 15th through August 19th, so tune in for that if you're interested. Forward dividend is 32 cents on the year. They are quarterly payers, so divide by 4, though we will see that here in a little bit. With a starting dividend yield right now at 2.47%. Ex-dividend date, June 12th. Looks like they're going to pay out July 5th. And a one-year target estimate, at least according to Yahoo Finance, of $15.73 per share. So they see it setting a new 52-week high over the next calendar year. Now we're going to jump over to under dividends and splits and look at dividend yield theory. And to do that, we go down to their 5-year dividend yield average, which they don't have, unfortunately. So let's look at their trailing dividend yield, 2.47%. 2.47%. That would actually tell me that they are at fair value according to dividend yield theory. Unfortunately, we don't have 5 years to look at, but since it is the same, that would be fair value. And to be honest, we're going to see here in a minute, they are not raising their dividends. So that is why it's the same. So they've maintained the same dividend here for the 5 or 6 years, or I'm sorry, 3 or 4 years they've been paying out. Payout ratio is very low, though, 15.76%. So they have a lot of room to increase that dividend over time if they want. With such a low payout ratio, they just have not been doing so. Now we're going to take a look at free cash flow. We want growing free cash flow over time, or at least I do. We want growing free cash flow over time because typically when a company has growing free cash flow, they can make sure to pay down their debt. They can pay dividends, which is what we want. They can make acquisitions. They can reinvest back into the company. All right, just make sure that they have growing free cash flow and their payout ratio is low. I like 75% or lower on payout ratio to make sure they have a nice margin of safety there, and their their dividend payout is safe. Going back to 2020 here, you see $121 million in free cash flow. Now 2021 doesn't look like it was a very good year. Negative $38 million. 2022 back up to $238 million. 2023 $220 million. So a bit of up and down. Overall, you're not seeing steady growth here. It looks like it's a bit of a cyclical company. They aren't repurchasing shares, but they are repaying debt. But this doesn't really mean much on its own. You would want to look at the repayment of debt and compare it to the issuance of debt. Doesn't mean much if they're paying back $1.5 million in debt if they're taking on $1.4 million in debt, right? That means they're just paying down a little bit, not quite what it looks like here. But so check that out. That's why you really want to get into the financials of the company and see what each one of these lines mean, not just on its own, but compared to the rest of the metrics. Now we're going to jump over to stockanalysis.com, and I recommend more than one site, Yahoo Finance and Stock Analysis. I am not affiliated with either site. So they don't pay me to use their sites, but they're just two that I like to go to for information, and I recommend you use more than one site. Any sites that you want, pick the ones that you like. Just make sure you're not blindly looking at one so that you make sure the information you're getting is up to date and accurate. Unfortunately, they only have one analyst that looked at this one. That one analyst does call it a buy. They have a low estimate, an average estimate, and a high estimate of $17, which would be a 33.33% increase from where it currently sits. We're going to jump into statistics. We're going to take a look at how efficiently this company is reinvesting its capital back into the company. To do that, we look at return on equity and return on invested capital. I like 10% or better for both these metrics. Now, return on equity does meet that metric at 14.4%, but return on invested capital is a little bit low at 6.86% here. EPS growth, I like 5% or better. This one does not list EPS growth, so it does not meet that metric there either. Unfortunately, it didn't have revenue growth forecasted either. Now, let's jump over to the dividend. Again, quarterly payer. Low payout ratio, I like 75% or less. They have 16.93, so they have a lot of room to increase that payout, but they are not increasing that payout, right? So if you go back here to 2021, this is when they started paying a dividend, back in 2021. December 16th, 2021, 80 cents. Looks like they actually paid out January 7th, and they pay out on the January, April, July, October timeframe. A lot of companies don't, so I do like that they pay out on that timeframe. But as you can see here, 80 cents, 80 cents, 80 cents. Since 2021, whenever they first initiated a dividend, they have not raised that dividend. Still paying 80 cents, and that's what they will pay out in July. So I want to see dividend growth here with such a low payout ratio. They have the room to do it. They just are not doing it. Buyback yield is negative 0.22%. Shareholder yield is 2.29%. That's nice. Overall, let's take a look at how this one shakes out in the overall breakdown here. Back to the vested interest stock screener. Yep, we understand the business. That's where we started. That's why I start the videos there showing you where their website is so you can make sure you understand the business. Growing free cash flow for the last 4 years does not meet that metric. Growing dividend, it does not have a growing dividend. They started that dividend in 2021 and they have maintained the same. Dividend payout ratio of 75% or less. It does meet that metric. Very low payout ratio, under 20% here. Check valuation based on dividend yield theory. Dividend yield theory, since it's flat and they haven't raised a dividend, that would say they were, at least according to dividend yield theory, fairly valued. But that's not a very good metric because they are not raising their dividend. Buy below current cost basis or within 15% of a 52-week low. It is not in my portfolio, so the within 15% of a 52-week low is what we look at, and it is not quite there yet. We need it to drop down to $12.13 or lower. It does not meet the metrics for return on equity and return on invested capital. Return on equity it did, but return on invested capital it did not. So no check there. No checks on the earnings per share growth of 5% or plus. They didn't list it, and it's not a bank, so we did not look at price to book. So this one, unfortunately, does not meet, Tanya, this does not meet the metrics I would be looking for on this one, but I do appreciate the recommendation. Well, that is really it for this one. Let me know what you think in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And again, drop a comment down below. Let me know what you think of the videos. Let me know what you think of Dole. I'd like to know your opinion on the company. Is it in your portfolio? Is it one you're watching? Is it one you're avoiding altogether? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Dole you'd like me to cover on the Stock Pick of the Day series, I do these Monday through Thursday when the market's open. Drop it down in the comment section. I will work it into the rotation. I think this one took me about a week to get back to Tanya's recommendation here, so I'll work it in. It might not be within 7 days, but I will get it in. It goes on a list. There's some other ones I'd like to cover of ones I'm interested in or ones in my portfolio that have pulled back. I'd like to do a back check on those. So again, just drop it down there. I'll work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend. We will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. So I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk and money should never invest any amount of counsel. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel certified financial advisor.